Okay, hey everybody, welcome to June 12th coaching call here. We're going to take a look at Bitcoin. We're going to examine psychology. We're going to learn how to lose well because the best loser wins here. So I recently just gave a signal here. There was a dynamic. It looked better on the hourly. Of course, it obviously looks doesn't look great in hindsight. That's hindsight bias, but on the hourly there was a buying tail and there was an overshoot, so that was a signal. So I had to take it at least to the VWAP. It started to move against me. So before I took a full 1% loss, I just cut my losses really quickly. My instinct's right. On a sideways, at the very least, if you go from a top-down perspective, this close so heavy, we were so near major resistance here. If I drew horizontal resistance, we're near, we just invert this, we're near support, right? So same thing. The idea is that because we closed so heavy that we were at least going to be sideways, if not sideways down. So when this one came up here, right, to initial resistance at the high day, that was actually an acceptable short setup. It's just psychologically, at that point in time, I made up my mind not to trade during intraday. So I wanted to wait more towards the end of the day before we got something. But keep in mind when I took this, even though we had the overshoot and it was at pretty good support, we had pretty much a huge bias, as you can see, against us. Not quite as much before this broke down, but there was still a bearish other markets in terms of their intraday bias. The momentum was a little against us, but there was a double bottom. Ethereum didn't have a double bottom. It was straight. That was one point against it. SWE did have this double bottom, but they don't always work. Now, that doesn't mean that I wouldn't take that one again. Now, I initially I had my initial support here, and then my next major support zone, or not rather micro bull, would be here. But if there's too much of a gap, there is going to be something in between. Now, these aren't zones that you would take necessarily without other things happening, but you can see here that once I drew the fixed range or the high volume node, you can see over the last week and a half or so, there is a high volume node here. This is like a hidden area of support and resistance where we launched from, and now we're getting a bounce from it. So there might be an opportunity if we can build sideways structure here to go with a wide double bottom if we're going to get, or even a wide double top, right? If we come back up into this, notice that this was a very strong zone. It's like similar 1, 2, 3, and then once we broke it, we came back up into it. That actually on first test was a really good trade, just from beauty principle, because this zone just wasn't the high of the day. This was a confluent zone that we broke down from on first test, really, right? This was yesterday's bounce, 2-day bounce breakdown pattern on first test, right? On a day where we closed pretty low, so there was low odds, at least we were going to have some type of sideways, neutral, larger time frame buys. That was a really good trade. You can see it worked here too. When you come back up and retest the zone of confluence. Now, also, right, when you get a reaction of a zone and it comes back into it, like I took there's always a risk that you already got the reaction from it. So that was crossing my mind too, as I'm weighting these probabilities. But what made me take it a little bit is that we did get that dynamic overshoot, and it did look really good for a buying tail on the hourly, and just didn't happen to work out. But that's trading. Now, there's going to be other opportunities in the market. You have to have an abundance mindset, and you can see just going back in time here how this tells a story. So, what is the next narrative? Well, the next narrative is let's be patient here, right? We need to see how this plays. We don't have much of a momentum overthrow here. And we do know that the markets tend to revert towards these moving averages. We call that a dog leash principle. Now, if we did do that, that would just be a really ugly sideways balance here. And then, which is a phenomenon that you have to reckon, is that once we bounce for a little bit, that's when we're going to either resolve here or here, right? Once we, right? And even this took time. We get a bounce here, bounce up here, break down here. Then you can just say this is one big bounce if you looked at like a fractal. We also know that if we just look at here, right, this is where price was, right? We had another high up here, and the CCI couldn't break a momentum past prior push, right? And then we had another push, which even a lower momentum, a little bit of a zero line reject here and a hook from extremes, which pushed us all the way up through here again. which did bring us up to this orange 200 to 0 line. But once again, we are getting a double divergence in the momentum. Now, I trust these more in the EV line with the S&P 500, but they're also useful here. This was another reason where factor where I, at the very least, I said my larger time frame bias is now going to be shifting from, because it was bullish this whole time, and now I said it's going to be neutral, right? And I'm going to see how this resolves, because eventually it could become bearish, where it's like, okay, now we're in a downtrend, and now we just have to think about this expanding a bigger fractal, right? Disappointing. Like, I didn't even, just assuming that we had this shoulder, we had this inverse head and this shoulder. We had a touch here, touch here. I had actually higher odds for a trend line overshoot, but we didn't even get that. We basically just got the horizontal, which is fine to have both, right? Support and resistance right there. So just keeping in mind all these scenarios of how they play out, right? If this breaks here, good odds now that we are going to just have an extended summer, even at the very least a larger balance. I'm not saying it has to go down here. Then this one would have to resolve one way or the other. And that's just how someone would really do it without making predictions, right? I can calculate the odds, and then I say, okay, well, if this balance breaks here below it, right now we have a balance breakdown. When it comes back up to the balance breakdown area, even on the daily, it has high odds. Intraday, this had really high odds. I'm just need to be more open to the psychology of shorting, because just your cortisol levels are just on fire. Even this little trade here, my cortisol levels go up as a trader. So it's like part of me is like, well, I don't really like to trade actively around the time I'm coaching, because one's a performance discipline and one's basically this, not a performance discipline. This is a market analysis plus I answer questions, so it's not a performance discipline. But nevertheless, it's a living journal, and hopefully these ways of discussing the system are useful, because the system is very good. The system will work out. It has worked out, and you can see it work out over and over again. So yeah, as we came up here, we had to be on our toes. That's why basically for most of the day was not to trade, and that was the right call most of the day. We broke down very strongly here, which is why I exited my pullback continuation trade from a signal on Monday, because I wanted to capture those winners. Another thing too, just keep in mind with the runners, right? Sometimes with the runner doesn't have to run forever, right? Think logically. Like, a runner might not break through here, and if you're not far enough down, right, then you're going to be dealing with getting stopped out. So if you're getting 2, 3, 4, 5R on a trade, like, pretty much know you in Bitcoin, it will go back below your break-even spot, even at 6R. Just capture those things. Just know you'll be able to get in again. And just know on sideways days, you can take double tops and double bottoms. It's not just, going long. Up here, we could, right? What is the bullish larger time frame bias means? It means it's giving more weight to every support zone, which actually is like in alignment with Corby's system, because I have a hybrid, which is like sideways up. We're basically going with the trend. Now, basically, when I was up here, I'm not Nostradamus. I didn't say bearish, but I didn't say bullish. I said uncertain, because that's the answer. We don't know, right? And as you can see, when I say a larger time frame bias neutral, well, usually the price action will reflect a back and forth trading range, which is, sideways price action, neutral, uncertain. Right up here, they're establishing value, right? Buyers and sellers are transacting. Like, people that are very happy are selling. People that are FOMOing and haven't really figured this out yet, maybe are buying up in here, or just it's institutions buying at certain times. All it takes is one giant company, one schmuck to do something where all of a sudden you have a God candle that broke above here. And now we have basically on my system, ideally, obviously above here. And, let's just say we build some structure up there, to be fair. But the idea is that once that breaks above there and we build structure, now we have time frame alignment. We have a bigger picture balance breakout pattern, and now we're going to be in price discovery. But as it stands, until that bigger picture balance breakout is confirmed with the structure pullback and all that, you're going to basically get false. The other pattern on the flip side of that is very much what's happened every single time we've gone up there, which is a false breakout pattern. Because we, when it went up here, it's like the little tail, right? But you could see there wasn't, markets don't go straight up forever; they go sideways. So there was nothing else but blue sky, right? And it's developing going back up here, right? That is a double top. That's a short signal, right? And it made money. Like that is a really basic idea. And also it's in alignment with the phase of the market. It just had a balanced breakout pattern. And this is 100% of that. I've already shown that in a different video. And then we have a double top, right? Now, a little trickier because we have this balance and it's like, well, this is also a fractal. The double top, the way that it was coming down here, right? You don't really know what it's going to do until it does it, right? The idea is that when it did go back up on first test, that was a huge odds trade. Right. Also closing below that the next day, you're making sideways down or down calls. So you're getting some of that, but really it's the retest having that gut. That is a tough trade. This was that moment. This was around March 2nd, I believe. Yes, you see, I remember that day. That was a crazy day. I was on vacation that day. That day faked out a lot of people. We had a zero line reject here, textbook zero line reject with the blue overshoot here and the yellow not hitting it. Remember, a hook from extremes is they have to both go at least touching this and ideally above it like this. But this is actually better because it's like, look at how much time we spent above it. Now it's not even going to go above it, and now it's going to go back down again. That's what you want, right? That was a good trade. And we saw that today on the intraday time frame when we retested the high of the day. We'll go to that just to show the fractal nature of the markets. Here's the new day with sideways day. Here's the high of the day, also in alignment with this previous balance breakdown pattern and a huge move down. Much better than trying to get this overshoot. Obviously here into this, right? There is a trader that I coached with who's also, he's like, hey, in 2008, I made a living literally just waiting for the intermediate to go down, and then to hit a high volume node that was longer, like at least a week or two, and just blast into it with a wide stop. I was like, wow, okay. I mean, they do have very high odds. Like me just getting excited, right? I would take this if I was able to, I had a coach now, but it's like, this burned me out. And then this is like, oh, I got a coach. I don't want to be thinking about two things at once. But you can see I made that green because I was like, okay, this high volume node is interesting. If this holds, then we're building a fractal above here, which is kind of similar, right? We had a fractal above here that spent a little bit longer time than this. And yes, this did eventually break this fractal, but now this is breaking down into this. This is not, that wasn't there before, right? This is new, right? In fact, the high volume node was here. So it made sense that it would go down here, double bottom there. That was an awesome trade that day, May 31st, right? But remember, I'm just reminding myself, like these are short setups. When I go back up and they test the previous intermediate term, like a week or two balance breakdown, you're like, I'm just back texting this. This is like, you put this, you short it right here at the back of my zone, right? Technically, right, if you add 1,000 points, because like, move 2 decimal plates over, give or take, whatever, if you just want to be conservative, just to get an idea of like what 1% would be, then you add 1%, like 178. Yeah, I mean, that would take me close to like here. I mean, I don't expect you to ever stop that wide unless you wouldn't have size. But the idea is that if you get good enough trade location, you should have your stop somewhere even in your next zone. If I try to draw them that way, but as we're getting higher and higher, these are like 2% stops, and that's the max. I don't expect people like on this one that I lost 0.6 or 7% instead of taking like a 1.5 or 2 because I didn't want to. Why have it here and get stopped out and then have to go in again? This was already moving. My idea was already wrong. And the idea was that you have to lose really well in the strategy. Like that was something good that I did instead of like the previous guy through my states, like, hey, you just sometimes sit through these losses. Just don't do it. Just get out early. Now, there is certain circumstances where you actually have to let the probabilities play out. This one wasn't because there was a lot of shit against me at the time that I took it. And of course, now I'm getting the neutral day as we pull back a little bit too much over an overshoot. So if this does turn out to be a neutral day, which means that we broke through both sides of this hour range, right? But even from a daily perspective, right? It's still heavy. I still see this. Like I'm still seeing us pulling back into this. Like I'm not saying we're not going to get some type of reaction here, but it's very tricky because these are all minor. Like this is this time frame. right? But we're coming from, let's flip it around just to remind us that we're coming from a support zone, but it's resistance. We're coming from a much bigger zone. So technically, right? But we're coming from a much bigger zone, but the larger time frame trend for the last month or two has been very well, obviously this case bearish, right? But I mean it's bullish. So this is a place where it could reverse. That's why the neutral call was pretty good, but now we are getting them. Sorry, I got my dogs behind me. They just guys, come on. So yeah, no need to be first here, but yeah, this technically counterintuitively getting up here and trying to short because of this was a major range, even though we've been so bullish, was actually the better call than trying to catch these for a little pullback. And this is what the thing about trading that can make you crazy. You could say, okay, I do see this pattern and I've been doing this one for years, but now I'm doing it less for years. Keep going, keep going, keep going. There's going to be something, that's basically the eternal positive person who has to always be and say, okay, what's the market telling me now? Where's the next positive expectancy trade idea? That's the short-term trader. Okay. But they also have to be realistic in a way a huddler isn't. A huddler is so not realistic. A huddler would sit and wait and go, hope, oh, see, it went back up. And then 1 month it goes down and he never gets it back again. So you can't even, I would never even be talking about trading with a huddler strategy or buy and hold at all. But because I basically trade S&P and Bitcoin and all these cryptos, there's going to be huddlers. So no offense to huddlers. I also invest in huddle, but the huddle psychology is absolutely completely awful and antithetical to this psychology. For a while, it was even hard for me to sometimes go back and forth between them. I didn't like to do it. One of them is you double down, keep buying at the lowest level possible. Well, let's just say we just had a huge balance breakdown, like one of those giant balance breakdown candles. A huddler would be like, oh my God, we just got to this low level. Let's buy. And a trader like me is going to be like, wait a minute, all the time frames are down. This thing's probably going to be going at best sideways down for months. Why would I want to give a signal for a huddle guy to hold below break even for a year? Kind of a thing. Like that's how a trader would think. They're not thinking just in pure levels, thinking in cycles, timing, who's in control. If I do go long or short, what kind of reaction can I get? Could I get a reversal or a larger move, or am I just going to get some type of tradable reaction to a VWAP? And having these types of frameworks in your mind ahead of time so you know what you're getting into is super important. Obviously, if you're coming from a really strong zone, right? Like up here, right? If you took this double bottom, I can't remember if I took this, I might have. Right? The idea is that I have these obviously support white resistance at the time, red. So as this is pulling back, right? What am I basically fading? I have that rule when we have a trend breakout, which I basically call this. I basically gave a pullback continuation setup here. One of the best trades I've ever given because, we have to also, as we're getting better as traders, keep in mind, like if we can get, if the less time I'm in a stressful situation, the better. Well, I have a 4-star trade. The 4 stars based on my system because you're not going to be holding it that long to finance. Like whereas if you're in some sideways thing because everything's against you, you could be holding it for 24 hours or 12 hours or 12 minutes might feel like forever. But this was the idea that this thing broke up here on momentum, right? We were in a high volume node, we were in a mature balance. Everything was up, saying trend. The other markets were bullish. We know that all balances end in trend, and they start out of VPOX, and they start after 2-week maturity for sure. And we had a V sideways dip go pattern that Corby taught us, and we had market moving news. I have a list of pre-market conditions that started trend. Those were all there. That's why I was psychologically listing them ahead of time. And then I blasted into that on full size, and we made some money. And I got out before this kind of right. So that was a 4-star trade, right? But this one here, momentum was with us. The larger time frame bias was with us, and this. Now that we hit this one, now the larger time frame bias is neutral. We don't have that with our longs anymore. We also technically, since this is a major resistance zone, based on that automatic order rule, I should have shorted. I didn't have the balls to, even though I know to do it, and I wrote it down in the channel. I'm just telling you, it looks scary. You try putting, you know what it's like when you have a full size and you want to put, 100K on this or something. And it's like, oh, you should do it, but it's just, whatever. The system says to do it, you should do it. At least this double top, that was so nice. I'm just back testing for myself because these were really great major resistance zone setups. That's why I'm glad I just list the system in the channel because, to execute this is one thing. I have my own psychology. Everyone does. Some people are paper trading it and get nervous. Yeah, try doing it on size. You know what I mean? And the other thing is, you could just see how the rating and the quality rating system combined with what I've done with Corby's system with the sideways down, daily call template, everything we do pre-market, plus what I've added with the pre-market conditions for the trend stuff. That stuff is really helping us. Now, just to give us the rating, when this came back down again from this zone, keep in mind the resistance is stronger than the support, so I have that in mind. But I also have a rule that after a trend day, I have to take it on the first leg. So technically that was an automatic. This was automatic. That was automatic. Quad exit, 75 off, whatever. We're making money. We don't know the outcome. I'm just going back. If I followed my system perfectly, there's a sheet that I stopped filling out because if I started filling out all these sheets, I would be filling out sheets all day. That's why I have a stack. I'm going to be hiring soon full time. I just see him intermittently. He's going to be filling these out. But one of them is, what did I do versus what was my call? My call has rules that I followed that, and that's comparing your behavior. So it made sense to take this one because of the rule of the trend day, and we had a double bottom. But it also made sense that because this was major resistance and because yesterday was a trend day, those two were probably going to neutralize themselves from a power perspective and have a sideways day. So we could go long and short on this day. Right? As this is maturing, you're thinking, okay, well, it might break one way or the other. That's what I was thinking when I think I went long here and got out really quickly for a small loss, not a full loss. Even our full losses in our system are small losses, guys, just so everyone knows. But we can get out early. Now, I would never be saying this. Back in the day, I would get out early and I would be talking to Corby like, oh my God, I'm missing trades. I'm constantly getting out early out of fear. That's not this. This is me kind of knowing I shouldn't have been in this, partly because we are at this major resistance zone. So everything that I do take, and I'm not, you might say, Matt, you're saying that I'm biased. You said to take this. I'm like, no, I'm going to go back to the rules. Remember the rule for the automatic order. Automatic at major resistance or major support. This is major resistance. Automatic at the first leg from the previous day of a trend day. This was a huge pure trend day. That was an automatic long. This long, however, does not have the previous trend day rule. So it's not automatic. So basically what is it? It's yesterday's low, which is a weaker support zone in context than yesterday's high and today's high, because yesterday's high and today's high not only has confluence within itself, but also has confluence with the fact that it's major resistance from the all-time highs. That's why we have it listed as major resistance. That's huge. So if I was following my system and weighted the scales, I couldn't have taken that. So I instinctively knew that, but I just kind of, I don't know, I just did it. You know what I mean? It's like, oh, okay, it worked before, blah, 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 And truth be told, here's the thing. It wasn't the worst idea because I remember this. I was exhausted from the reunion, and I said, I'll be fine. I'm just gonna lay down for a second. I'm like, when it gets up to the VWAP, get out, guys. I could have had a winning trade. That wasn't a bad trade, at least for a pop to the VWAP. By the time I woke up, it was around here, and I was like, okay, I screwed up. I'm out, and it was better than getting a full loss. My stop would have been down here. You know what I mean? If you're having like 1% from where you get in to 2%, it should be kind of here to near your next zone. Because otherwise, if you make it so tight near your zone, if you're a tight master, you're just going to get look at that work. You know what I mean? That type of thing. So make sure you get in with good trade location. But also, if a lot of things are against you like this, get out. And I just explained why this one wasn't as good. Now, I could have used kind of the same rule today. I mean, at least Bitcoin did have this slight overshoot, but this was pretty heavy. And this was yesterday's balance breakdown, which came down pretty strong on momentum before we got this volatility spike. You see how we just got this volatility spike on the 15? That is actually, there's a rule that my Dubai mentors told me, saying most zones should only be faded, meaning enter a position counter to price action, if I'm seeing some type of exhaustion divergence there, right? There was this exhaustion here represented by this volume spike. So that has, at least if you got in here and you saw that, you would have at least had, like, that's a good bounce. Like, don't, you're getting financed there. At least you have a free chance. Even if you come back down with fees on size, you're still going to make a little bit of money. That's a good day to try it out. We have a very small margin of error as traders. We don't take huge risks to make a lot of money like the huddler guys. So you have to take these positions. And the reason why I would quad that sooner is because everything was so against us. Now that broke against us. Like I said, that was also a short. And like I said, this was that dynamic double bottom, but we did not get that. We want to look for these intermarket synchronicities as well when we're trading for an edge, because there were so many things against us, because I was going long without the rule of the trend day thing against that major resistance. The idea was that we have to stack a bunch of edges. Now, one of the things that I remember thinking to myself where I didn't want to be in this, and they got me out early once I got in, is that Ethereum was not making a dynamic double bottom. It had no double bottom. It was just like breaking down. I was like, oh, that sucks. What am I doing? SWE did, but SWE's whatever. I don't really, it does mirror Bitcoin a lot more than Ethereum though. Look at that. So actually for this cycle's trading that I've relocated, or even, like, you can't, in my opinion, put all your eggs on one basket. You can't put everything on the exchange and leverage everything. That's why you should have a multiple time frame strategy, because you might be the best trader in the world, but if you're a really great crypto or Bitcoin trader like me, and your exchange gets hacked, what good are you? Bybit was hacked, and I do trade Ethereum on size, and everyone lost their Ethereum, but I just happened to not be in an Ethereum trade that day. So just remember, that's why the buy and hold, and also moving things on these wallets to stake a little bit, is not a bad idea as well. But just keep in mind that I think after this bull run, we're going to have a .com thing, and 99% of the people are going to get destroyed. So just remember, do not fall in love with any of these. My goal for everyone in this channel that's investing in these is not to capture the highs. You might even get mad at me because I cost you AK money in the end. My goal is for you not to be in another 4-year bear market like a lot of people were in 2020, because these will never recover again after this. These institution money is too smart. We're already seeing abnormalities and alt seasons and so on and so forth. So forget this whole day trading context. A lot of people don't even day trade Bitcoin, but hopefully some of the psychology can be extrapolated to other time frames. So let's just go to those other time frames and see what the investors are looking at. Still creeping, nothing much. Okay, so this is an interesting crypto total market cap, which is really good for us as investors. Let's just see if there's any behavior we can see. Now, if we take anything in isolation, right? Oops, we might go back in time to early September 2024, and there was a death cross manifesting, right? That's when the slower moving averages crosses above the fast one. This is, I think I have this one set to the archetypal 250. You could do this yourself. Now, if you took that in isolation, this is that in itself. That's why we have a probability calculation scale, and you can't have a simplistic setup like this in a vacuum. Death cross I short, golden cross I go long. Let's just see how this behaves, right? We have a double. Let's just see how price. Beauty principle is not just what it does as a support resistance, but how price behaves around it through price action and also reversions to the mean. So double bottom is the price action. We came up into it. What happened? Double bottom, marked by the green circle, death cross. Let's see the beauty principle behavior. Let's see what happens. Bull run. Okay. This is a giant bounce. Let me just draw that for you, just so you see what I'm seeing. So this is a bounce, an ugly one. Obviously, another thing that I talk about that increases the probability of a trend. We know that all bounces end in a trend. We know that they launch from VPOTs. We know that the greater the maturity of the bounce, the greater the odds that it will break out when we creep up next to it. And we know that the greater the maturity of the bounce, the greater the trend potential out of it. We also, let's not kid ourselves, we have to also see volatility contraction. That'll also increase the odds. We got that as well. I'm just drawing that to show you something over here, right? Look, double bottom, death cross, the opposite happened, beauty principle breakout. You would think death cross down, but double bottom, death cross, because all these other things I just said about maturity and contraction and all that, VPOC. Okay, look, double bottom, death cross, touch, down. I mean, I think we're going to break out. If we just based on this behavior, there's other things, right? I'll go to another chart so I can have a more balanced behavior bias, right? And this is just me, what I'm thinking just on this. That's what this chart would suggest. You know, it's not going to repeat, but it rhymes. Does it look exactly the same? No. Do we have the maturity balance? Yes. Do we have a volatility contraction? No. But do we have a bigger picture pattern that's bullish? Yes. And what is that? Look, shoulder, head, shoulder, inverse head and shoulder. That's bullish. All for it. Now, yeah, that does suck that this broke down. But that doesn't mean that we're done yet. This, like I said, we're done when the balance breaks. You can go online and there's probably people making kissy faces and crazy faces and with the red backgrounds and all that crypto stuff. They don't know the future. Someone could come in and ruin their brilliant bearish idea that we're going to go down here now because they decided to put it in order that just balances this out and then we have a balance breakout, right? All it would take, right? Because all it means is that we failed here, that at the very least it has good odds to rotate here and form another balance. Whether this becomes a balance breakdown or not, that's, you know, straight line down there would be a reaction. Breaking out here would produce a balance breakout of this magnitude, but would also produce a fractal bigger picture balance breakout. But we'll see what happens. Like I said, what I like about it is the beauty principle. Double bottom, volatility contraction, death cross, opposite, death cross, opposite. And now we got the golden cross, right? That's when the fast for the first time goes above the slow. So, and you see when we had what happened when we manifested right at the breakout, right? We had a golden cross. So we had a death cross prior that faked everybody out. Then we had all those other things we looked at: maturity balance, volatility contraction. And when I say it was manifesting around a VPOC, I meant if I draw a VPOC like this, see how I'm not making that up. It didn't start here. It started right at the red line here, smash. And a beautiful trade, right? When it comes back, just like I told you, I just missed on this Bitcoin thing here, but that's okay. I'll get another one. When you come back down into VPOCs, you can at least get good odds for a tradable reaction. Oops, let me go back to that. So this chart is making me feel like at the very least we're going to build a shoulder here with some decent odds to see if we can have some type of resolution. Based on a bigger picture pattern, it suggests upwards, but keep in mind a resistance zone is a resistance zone until it's broken. No mystic can break that principle. It just is what it is. But this trend, like when you saw something like this and you were making your daily call, you wouldn't say to yourself, oh man, we're at a resistance zone. You would say, oh God, you would look at all this maturity. You would look at the way price arrived there. You would look at this and you would see the strength and how we would just creep. And then you would be like, oh, bigger picture bounce breakdown, right? So this is a very bullish chart. I'm actually going to publish this chart for everyone in a second. I'm glad we went over that one, but let's see if we can temper that. I just want to play devil's advocate. This one might make you think a little differently, and I don't blame you. Now, this one beautifully has predicted these bullish reversal cycles here. I hope you guys loaded into here, loaded into here. So what I mean by a time cycle is it's not just predicting a reversal point with a high probability, but it's also, and this is what every trader and investor wants. We want resolution now. I don't want to be sitting for 2 years. Look how quickly, right? I mean, if you bought here on first test, you would have to sit through weeks. before resolution, right? First test is ballsy. I mean, I experienced a first test slap in the face, I think, yesterday. The first test does have best odds for tradable reaction, but that's mostly for a shorter term trader. We're talking, let's say you're in a position in a swing trader and you want to also maximize your emotional capital. And remember, when your money's tied up, that's an opportunity cost. Okay, so that's another thing. And this time cycle really can help us there. Look at that. Not a lot of time spent and a huge cycle. Now that we're up into resistance, we're going to go into a sideways phase. An amateur trader would go up into resistance and think, oh, we're at resistance. Now we're going to go down. They only think up and down. We know that's not true. We know the market moves sideways, then it goes up, then it goes sideways, then it's going to either go up or down, right? We don't know. We just don't know, right? I'm betting that it's going to go up based on simply, I'm betting on this inverse head and shoulders pattern right here. And if it holds this, it goes back up, that's odds are that that would be a breakout pattern. That's, it's the way that it got there that's bullish. Now, if it got there like let's say we were here and it's just a sideways pure trading range, there's no edge there. I really, the balance in this case was mature enough. It wasn't, wasn't, hindsight, you can't really say, oh, it was not long enough. This is certainly a mature balance, but there's no bigger picture pattern within there. There's no V recovery. There's no V sideways to go. There's no inverse head and shoulders. So we don't know, right? A lot of times when you have a balance breakout or a false breakout, it's going to bring you all the way back down here. You're just going to get a larger trading range. But obviously, when you have a candle like this, a week like this, you better understand the concept of time frame alignment and a bigger picture pattern breakout, because all time frames are aligned. You have a balanced breakout pattern. And this is actually a chart that does show within a candlestick in and of itself time spent at price, because this is a week. So it is building structure. This isn't like a 5-minute chart, right? Or something like that, or a 15-minute, where we might be getting a false breakout or something. This is like, okay, this closed well above here. Very bullish. Right. And what's so cool about this is that this week I showed you guys how awesome this worked for the S&P to call that triple top. This is 100%. We're not even there yet for Bitcoin, guys. That's another thing too. This 100% range principle works very well. Just as a reminder. Look at that. I cloned that, went up here, boom, boom, boom. And I mentioned those Citadel hedge fund managers, but there was also an intraday options trader who was same year as me. He's in that fraternity that I went to, and he's done so well on Wall Street. He started his own options trading fund, and he was even asking me like, "Well, how did you call the tops? What are you doing? What's the 80 line?" I'm like, "You didn't hear that? You didn't hear that?" And this was such a validation to me that I did this on my own, and right, I didn't go that route, because like I needed to be able to talk strategies with these guys and more than hold my own, and it was really awesome to do so. Just so you know, this is what they didn't. It seems really simple in hindsight, but this is what is 100% range principle. You clone it, then you get a triple top, and you count up the leg counts like Corby says, and that's it. And then you have a hook from extremes, and you add up those. That's a bearish reversal, and we got one of the biggest. I was one of my best calls ever for investors. I was confident. I said, call in your portfolio Romanos and cash in. Why? Because I do know what portfolio managers are like, because I left that field. They do not like to press buttons. Their only goal is to keep you in the market. That is it. So it was harder when I don't know who was asking in the channel. It might have been George. Like, when is a good reentry point? On any time frame, right? Once we get this, it's the larger time frame bias is now coming from this resistance zone now bearish, especially when we got the confirmation of this bounce breakdown and like seeing the strength of these engulfing candles. And once you see that strength, right, I could start cloning these fragments. But remember, that previous bounce breakout spot is a huge support zone if we got there. And you can see if we got there, we did. Now we have a V recovery. I'm just showing you how well that works. Let's go back here. So look at, I don't know why that flipped like that, but it did. I'll fix it later. But yeah, that's what gives me some optimism that if we clone this, we're not even there yet. Let's just see what that price looks like for this cycle. 133,000. Yeah, I mean, very doable. Let's just and then some, you know what I mean? So very doable. But also keep in mind that, if we were going to base it off a big move, this could, technically, right, we could have something like this, which would sort of mirror this almost. This it might take that much to resolve it, which when it does break out would be better, right? The more mature the balance, the bigger the trend, so on. So yeah, so with that said, that's the market review. We got to be careful up here as traders at this resistance zone. Obviously, as altcoin holders, I'm just going to X this out so it doesn't save. There's really nothing we can do but keep holding our alts, right? Because the buy and hold alt strategy is that the alt season hasn't happened yet because we haven't had this insane blow off top in Bitcoin yet. And retail isn't here yet. And yeah, I mean, hoping for a balanced breakout pattern, what we got right yesterday. This is just basic candlestick patterns. We got up near the range and we closed now back into the range, meaning below this high. That is a classic false breakout, or you have the spinning top doji, right? Then we have a down day. When can we go long again? When it hits this, maybe when this gets up, something like this, like a zero line, right? We could be for a couple more not really what we wanted to see in a lot of these coins right now. But I think once the big banks and everyone knows about these things gets involved, it's going to be a monumental bull run. This is just the price of being early. So, all right, guys. With that said, that's the market review. I'm just going to check the chat real quick. Yep. All right, man. Thanks, Tim. All right, guys. I'm going to also do one tomorrow as well. Impromptu. Might even live stream it outside. We'll see. But I'll see you guys in the room tomorrow. Take care.